Okay, good afternoon, ladies and gentlemen. Welcome back to the 27th of January weekly market review. We are just one day before the Chinese New Year Eve, so I'd like to wish everyone a very happy New Year in advance. And today I have with me Mr. Gerald Wong as well. How are you, Gerald?
Hi, Sunny. Hi, everyone who has joined us today. Even though we are all very busy with the Lunar New Year preparations, it is also a very busy week for the market. So I've been in between doing my spring cleaning, doing my Lunar New Year, having to count the market and prepare the slides that I have for you today.
Yes, thanks for the reminder. My wife has been nagging me to start spring cleaning, and obviously I haven't started yet, so I think I have to do it tonight. So if my wife is watching this, yes, I promise to go back and clean up the house tonight. But I'd like to give everyone a heads up today. On the Monday morning, we hear the first-hand news that Trump has announced that he will slap a 25% tariff on Colombia, and I'm seeing a U.S. futures, Nasdaq futures down 1.5%. S&P futures down 0.75%. So it's going to be a rough week, and it's going to be a busy week because we have the big tech earnings coming up. We also have the FOMC meeting on the interest rates, as well as the PCE price index coming in on Friday. So I will not hold back too much time. I will let Gerald start off with his presentation today.
And before I go into my presentation, Sunny, I'll make sure I send the video to your wife
Thank you.
so that you will do your spring cleaning tonight.
Okay.
So we'll go to the more serious stuff, which is the disclaimer. So today's sharing is for information purposes only and should not be taken to be financial advice. Okay. While we are preparing for Lunar New Year, we have a Ask SIAS that is coming up on 12th of February. That's a Wednesday. So after the 15 days of Lunar New Year, if you'd like to join us for the ASIAS on Wednesday, 12th of February at 7 p.m., do scan this QR code and the registration will close on 12th of February. If you find the weekly market review helpful, do leave us a review on Google. And if you are wondering how you can join SIAS as a member, go to this website, sias.org membership. And as a SIAS member, you can access various online resources as well as investor education programs. Okay, so Sunny highlighted some of the volatility in the market with the tariffs that were announced by Trump. And really last week was about the various policies that Trump had announced following his inauguration on Monday. And what we see is that the S&P 500 was up by 1.7%, given that he did not announce any tariffs immediately. So that actually provided some form of relief to the market. Okay, closer to home, the STI was down by 0.2%. And what we see is actually the start of the earnings season, which is driving some of this share price movements. Okay, I did not touch on this last week, but I just wanted to highlight that the key data point that's come out in recent weeks is really this easing of US inflation. If I were to look at the core CPI, it rose by 0.2% month on month in December. And that would be a slowdown from the previous 4 months, which was seen by investors as a positive sign towards the Fed's ability to be cutting the interest rates. So I think what many investors are focusing on is the upcoming Fed meeting that is on the 29th of January. And what we see here is still very likely that the Fed will keep interest rates unchanged after having cut on consecutive Fed meetings over the past few months. Okay, so likewise, the interest rates are expected to stay at the same level in the March meeting, in the May meeting, and it is potentially in June that we will see one further rate cut by the US Federal Reserve, according to the CME FedWatch tool. Okay, so in the meantime, we see that bond yields have stayed elevated while they've come down slightly from the highs with the more moderate inflation print. They still are at fairly high levels because investors are worried that some of Trump's policies, including his tariffs, will lead to more inflationary outcomes. Okay, so we see here the 10-year US government bond yield at 4.6%, having come down from about 4.8% 2 weeks ago, but still significantly higher than where we were at the end of 2024. Okay, in terms of the top performers for the STI in the past week, we see a mix of stocks, including some of the tech-related companies like Venture, and we also have a few engineering companies like Yangzijiang Shipbuilding, as well as ST Engineering. Okay, in terms of the top losers, number of REITs, Mapletree Industrial Trust, CapitaLand Ascendas REIT, as we go into the REIT earnings season, some of these REITs have already reported their earnings, and I'll be going through two of the names that investors have been focusing on, including Mapletree Logistics Trust, as well as Mapletree Pan Asia Commercial Trust. Okay, so I'll start with Mapletree Logistics Trust. It is a name that many investors have asked us about. We see the share price at about $1.26, which is actually close to the recent lows that we saw in December as well as in July last year. Okay, so Mapletree Logistics Trust announced the earnings. What we see here is that they have got a fall in the distribution. The gross revenue of the REIT actually came down, and together with that, the net property income came down as well. We'll look at what are some of the drivers behind this decline in its net property income. Okay, and what we see here is that the borrowing costs are still increasing slightly compared to the previous year, and combined, we see a 11.1% decline in the distribution per unit to 2.003 cents compared to 2.253 cents in the same quarter last year. Okay, so we start by looking at the occupancy rate of some of Mapletree Logistics Trust property. Overall, as a portfolio, the occupancy rate was at 96.3% as of December, which is slightly higher than where it was in September. What we see here is that the Singapore properties have a slight improvement in the occupancy rate, but where the weakness is still largely in China. We see that the occupancy rate was at 93.5% as of December 2024, and that is really dragging down the group occupancy rate. Okay, next we look at the rental reversions. So likewise, what we see here is that in Singapore, they are still seeing positive rental reversions, even though that has slowed down slightly from the previous quarter. But if you were to look at the Chinese market, the rental reversions are still negative. It was down by 10.2% in the third quarter of its fiscal year 24-25, which is the quarter ending December 2024. Okay, so this has actually dragged down the overall portfolio rental reversions, such that on a portfolio basis, it was positive 3.4%. But if it's look at the portfolio excluding China, then it'll be at positive 5.4%. Okay, if we to look at the balance sheet of Mapletree Logistics Trust, that is still fairly healthy. We see an aggregate leverage ratio of 40.3%, relatively unchanged from where it was as of September 2024. The interest coverage ratio is at 3.4 times. So all of this is reflecting that the balance sheet of MLT still looks fairly strong. Okay, at the same time, the REIT has been very active in terms of its capital management. They have made a number of divestments in the previous quarter, and these divestments were typically above the valuation of the asset. Okay, that has continued through to the most recent quarter. We see that they have continued to divest properties in Malaysia as well as in Singapore, once again above the valuation of these assets. Okay, so if I were to look at the valuation of Mapletree Logistics Trust now at about 0.91 times price to book, so that is below the sector average, and it is also slightly below the historical average price to book valuation of MLT. Okay, next I'll talk about Mapletree Pan Asia Commercial Trust, another Mapletree REIT where we see the share price is hovering close to its 52-week low at about $1.20 as of last Friday. So once again, if you're to look at the performance of the REIT, the gross revenue was down. That was also reflected in the net property income that was down by 8.5% in the quarter ending December 2024. While we started to see some decline in the finance costs, overall, we have a decline in the amount that is available for distribution to unit holders by about 9.2%. And we are looking at the distribution per unit of 2 cents compared to 2.2 cents in the same quarter last year. Okay, so once again, we'll look at what is driving this decline in the net property income. Across the assets, the occupancy rate for the Singapore assets remain very strong. VivoCity, 99.9% occupancy rate. For those of you who are doing your Lunar New Year shopping at VivoCity, you'll probably realize that it's still very crowded, even though there is ongoing asset enhancement work that is at the mall. Okay. In terms of the other properties in Singapore, we see that the occupancy rate remains fairly healthy as well. Okay, where we are seeing weakness is really in the Chinese properties. If I look at the China property, the occupancy rate was at 84.3%, having declined from 87.1% in the quarter ending September 2024. And likewise, in Japan, the occupancy rate is at 82.6%, which is low compared to where we have seen the occupancy rate being at as of 31st December 2023. Okay, so overall, despite the strong performance of the Singapore assets, the portfolio occupancy for Mapletree Pan Asia Commercial Trust was at 90% as of December 2024, and that is a sharp decline compared to where we were at the end of 2023. Okay, if we were to look at the rental reversions, once again, similar trend, VivoCity having very high rental reversions of positive 16.9%. But this is offset by weakness in the overseas properties, including in Hong Kong, in China, and in Japan. So all of that is leading to a weaker positive rental reversion for the entire portfolio of just positive 4.6%. Okay, if I were to look at the balance sheet of Mapletree Pan Asia Commercial Trust, now at 38.2%, which is lower than where it was in December 2023. So that has helped to explain some of the decline in the borrowing cost as well. We see that the interest ratio remains fairly healthy, once again at 2.8 times, which is unchanged from the previous quarter. Okay, so if I were to look at the valuation of Mapletree Pan Asia Commercial Trust now, 0.7 times price to book, given that the share price is at fairly depressed level. This is below the historical average and once again below the sector average. Okay, if I were to look at the dividend yield of Mapletree Pan Asia Commercial Trust at about 6.7%, which is once again above the historical average for the REIT as well as for the sector. Okay, so having shared about two of the REITs that reported last week, we continue to have a few REITs that are reporting today and tomorrow, including CapitaLand Escort Trust, Kappa REIT, as well as AIMS APAC REIT. We go into the Lunar New Year holidays in Singapore, but we have a few major events in the US, including big tech earnings. We have got earnings from names that many investors are looking at, including Meta, Apple, Microsoft. At the same time, we have the FOMC decision that is coming up. So we have got a busy calendar, and that is something for those of you who are keeping a lookout for the market, would probably have to continue to monitor through the Lunar New Year holidays. Okay, so with that, I'll hand over to Sunny, who will share with us the technical analysis.
Okay, thanks, Gerald, for bringing us up to speed on what happened in the market last week. And indeed, it's exciting. It's a very exciting week ahead. I never felt so much excitement for a Chinese New Year period for some time. So, like I said earlier in the program, Donald Trump has fired his first tariff bullet. You can see that here in the Bloomberg News. We see that Trump slapped Colombia with a 25% tariff after I think Colombia blocked a migrant flight or block a migrant deportation flight back to Colombia. So that news was also flashed on the CNBC website as well. Trump imposed tariffs and sanction on Colombia after it blocks U.S. migrant deportation flight. Okay, so we also saw Chinese PMI data this morning as factory activity contracted in January. December industrial profits jumped because typically it is a December, there's a lot of factory activity. So not all good news on a Monday morning on the Chinese New Year week. You can see that the US futures, which is a prelude to how US may open tonight, the Nasdaq Composite Index is down 1.75% after last Friday closing, which was down 0.58%. So the S&P 500 futures, okay, E-mini futures is also down close to 1%. So this is a sign that we are going into likely a very volatile week with the big tech earnings, with the FOMC meeting, and of course the Fed preferred inflation gauge, which is the PCE price index coming out on Friday. So a lot to look out for in this New Year period. Looks like me and Gerald will not get an off day for this Chinese New Year. But let me touch on the STI index first. We can see that last Friday, STI has a slight dip. We just dropped 2 points on Friday, even though we saw some of the markets in the US having pretty significant positive gains, like what Gerald touched on earlier. And I was thinking over the weekend that STI would catch up this week, but then with the latest news that the Trump imposed a 25% tariff on Colombia, it looks like market sentiment is down, and then people are going into a risk-off mode or a Chinese New Year mode now. Okay, so on the STI index, we are still tracking the 20 days moving average, which is around the 3,807 points level very closely. This morning, we break 5 points below the 3,800 psychological handle. So if let's say we go down further, the next support level I believe will come in at the blue line here, which is the exponential moving average of 50 days at 3,765 points, and this is supported by the lower bound of that Bollinger Band at 3,755 points. Okay, so 3,750 will be a very critical and I believe a very strong support level for the STI to retest the resistance, which is the high that we saw this year at 3,887. Okay, on the indicator wise, you can see the MACD indicator has a negative reading. It also have a downward slope direction. So I would say you can see the STI is sort of in a range bound direction for the past 2 weeks, I would say. So I think there is not much of a catalyst or momentum until everyone comes back from the Chinese New Year break, which would likely be next Monday, before we see activity starts to pick up again. So MACD is negative. It is showing a slight negative momentum, which is adding pressure to STI, holding it below the 3,800 points. On the RSI, is also a neutral reading at 50-point neutral mark. So that pretty much sums up the kind of momentum reading that we see in the STI chart right now. There's not much momentum, not much direction, and the RSI is also pressured down by the 14 days RSI moving average of 53. So likely we are going to see a quiet week on the STI. We are likely going to see it being held below the 3,800 points before we see activity starts to pick up again next Monday. Okay, next let's move to the US indices. So the Dow Jones index has been rallying for the past 2 weeks already, and we have tested the upper bound of the Bollinger Band last week, closing at 44,424 points. Actually challenged the upper bound of the Bollinger Band right now, close to the 4,516 point level, which is why I'm not surprised we see the first red candle last Friday. Okay, so we are at an elevated level. We are back to an elevated level now on some of the US indices, and support level could come in on the blue line again, which is what we have mentioned in the 3 weekly market review this month. The Dow Jones Index, the support will come in around the blue line, which is the 50 days exponential moving average. It happened here in November. It happened here in September. So this time round, if we see a pullback towards the 50 days exponential moving average at 43,250 points, supported by the Bollinger Band basis at 43,000, which is a 20 days moving average. So 43,000 will be the key support level for the Dow Jones Index, and now we are testing the resistance level. And the next, if let's say we go another level up, it will be the all-time high that we saw last December, which is at 45,073 points. So 45,000 is the resistance level, 43,000 is the support. We are now pivoting around the 44,000 handle. On the indicator wise, MACD is showing very strong uptrend positive reading. So I believe, yes, there's a very good chance that we will retest the December high, but not so soon. So it is still an uptrend. So I would say if there's a pullback happen on any of the major US index, even if it's the Dow Jones pulling back to the 50 days moving average at 43,250, we can accumulate around this level to retest the high at 45,000. RSI is still showing a healthy reading at the 64-point reading. We still have some headroom to go before we hit the 70-point mark, which is the overbought region. You can see that in the November period over here, once the RSI hits the 70-point mark over here, the index will start to trend down again. So we are very close to that level now. So maybe we still have a bit more headroom to go up. But then once I think we hit the 44,500 points level, I think things will start to sort of have a technical pullback towards a support level before we start to push higher. Okay. Next, let's move to the broad index S&P 500. Same thing. We got a negative candle on Friday. We have on the S&P 500. We have a new intraday high. On Friday, the high was at 6,128 points, but then we pull back slightly. Okay, so we pull back towards the 6,101 points level. So 6,100 is the new close for S&P 500. But yes, we broke the December high, so we got a new all-time high on the S&P 500, which is a broad index, telling with the narration that we were talking about in December, that the rally that we see in the tech stocks is likely going to broaden out further. So that's why S&P 500 have a chance to hit a new all-time high this time. So MACD is still showing very strong positive momentum reading. So this rally is likely going to go up further, at least for the S&P 500 index. But then hitting the upper bound of the resistance level, it could mean that it will be a challenge to go up higher. So that means if there is no longer a higher bound or a previous high level that I can reference against. So I believe the next resistance level we are going to watch very closely will be the 6,200 handle. Okay. Next, let's look at the RSI indicator. The RSI indicator reading is at 61. So healthy readings also be above the 50-point neutral mark. And in the 60-point range, it shows that it has a good much larger headroom to move up compared to the Dow Jones Index towards the 70-point mark, which is the overbought level. And previous incident that we see in December and in November period, once we hit the 70 mark, we expect a technical pullback towards the 20 days or the 50 days moving average, which is now finding some confluence around the same level, around the 5,959 points level, or even 5,986 points. So anything below the 6,000 level would be a accumulation signal for the S&P 500 index. Okay, next, let's move to the tech-heavy Nasdaq Composite Index, being the most volatile index. So we did not see a new all-time high yet for the Nasdaq Composite Index, but likely we will see that soon. And if let's say we are to get a positive sort of a tech earnings that we are going to see this week on Wednesday and Thursday, then definitely the high of 20,200 would likely be tested this week if we see a positive reading for the tech stocks that are reporting this week. Okay, so looking at the indicator wise for the Nasdaq Composite Index, we have a slight positive reading, so a signal that the momentum is still up and positive and likely going to continue the upward movement that we have been seeing for the past 2 or 3 weeks. The RSI, although it turned slightly down, but it is still reading at 57, so momentum is still there, a bit not as strong as the Dow Jones or the S&P 500 index, but once it crossed above the 60-point mark on the RSI, I believe the uptrend momentum will pick up again, and hence I am pretty confident that we will see a new all-time high for the Nasdaq Composite Index this year or even in the near term. Okay, so if Nasdaq Composite Index pull back, same thing here. I observe the blue line here. Exponential moving average of 50 days, the support level now is at 19,387 points. So this could be the first level of support with the lower bound of the Bollinger Band at 18,954 points, showing more support for the Nasdaq Composite Index. So if it pull back below to these two levels, I will accumulate again on the Nasdaq Composite Index. Okay, so these are the updates that I have for you this week. Anything else to add, Gerald?
Thanks for the comprehensive update, Sunny. I think we have shared quite a bit about some of the latest developments, a lot of things to keep a lookout for this week, even though we are into the Lunar New Year holidays. So we'll continue to keep track of those and update our participants in next week's weekly market review. But in the meantime, I hope everyone would spend some time with your loved ones during the Lunar New Year period. Enjoy your bakwa and various Chinese New Year goodies. And then we'll be back once again next week to be providing all of these updates with everyone today.
Yes, so if you eat your Chinese New Year goodies, remember to exercise also, keep a healthy lifestyle as you watch the market. So Gerald, let's end with some Chinese New Year greetings for our audience.
Okay, so I wish everyone 恭喜发财，万事如意. Okay, have a very good year of the snake to all our participants of the weekly market review.
Wow, Gerald, I didn't know your Chinese can one eh. Okay, I wish
You
every
throw me a surprise so last minute, I must definitely show something, right?
yes, that really surprised me. So I like to wish everyone a happy and prosperous new year and stay healthy for the year ahead. Okay, thank you everyone. 恭喜发财, and we will see you again on next Monday weekly market review. Goodbye.
Thank you.